Very good afternoon, good morning. Welcome to our live market analysis FX week ahead with myself, Giles Coughlin, Chief Currency Analyst. Hope everybody is doing well. If you could just let me know you can see my screen and hear my voice okay. Hi, Jabeen, Johan, Josh, Maria, Ali, Abangale, great. Good to see you all. Now, as we enter the session, just be aware that as we're looking at different entries, exits, as folks are coming in, the whole idea of this webinar is that it's an educational webinar. Sometimes people might get confused, think it's a signal trading service. We're not trading signals. Instead, we're looking over my shoulder, someone with a professional trading background, and you go to see how I make trading decisions. And the idea is that that helps over time for you to develop an understanding of how to manage markets, how to manage risk, and should be constructive for you with your trading. Don't forget to make the most of this time. If you have any questions, ask them. Thanks, Josh. Thanks, Johan. That's great. Always good to know that I'm being seen and heard all right. Also, something special to point out in this FX workshop webinar topic, I will show how you use expectancy in your trading. Now, many people talk about risk reward, and risk reward ratios are important, but they're not the whole picture. And if you understand expectancy, it will mean that sometimes you can take a trade that has a risk reward of less than 1-to-1. This involves understanding probability and a little bit of statistics. It's not complicated, sounds complicated, but it isn't. And once you understand it, it will help you in your trading. Often things that are counterintuitive can be made logical. And on Wednesday, I will run through expectancy so that it's all clear. Today, we're going to look at these key issues. So we're looking at the CAD, pound, US dollar, yen, gold, and the New Zealand dollar. And as we start, I want to take us over to the calendar and just give us that big picture look. Okay, it's important with a week like this that we get the big picture. So I'm going to move us over to the third screen and just allow me to paint the picture that markets are in. Now, this tail end of the week, Thursday and Friday, Thursday is Thanksgiving for the US, and it's likely to be a much reduced trading day on Friday. Obviously, that's kind of Thanksgiving on Thursday. Many people will be off on the Friday as well. So expect a shortened trading week. Now, one of the key things to be looking out for at the moment in the market is all about expectations regarding the Federal Reserve. So a couple of things to note. The first thing to note is that we've had a positive comment about sooner tapering finishing and an earlier rate hike from a more neutral Federal Reserve member. Now, whenever you're looking at Federal Reserve members, and you always, whenever you're trying to understand, which Federal Reserve member is hawkish and dovish, this is a little cheat sheet that we use for those of us who are at financial source. If HYCM clients can get access to this resource, and we have a whole list at financial source about all the different Federal Reserve members. Now, this Federal Reserve member here, Clarida, is a neutral board member. Now, when a neutral board member says something dovish or hawkish, it's significant. And so Clarida, who's normally neutral, today or over the weekend, said that it may be appropriate to discuss the speeding up of tapering. The economy's in a strong position. Q4 will be very strong, right? There's an upside risk to inflation. So what this means is that if tapering finishes more quickly, it opens the door to quicker interest rate hikes. And you can see here that yields have been moving higher in the bond market. And the reason yields are moving higher in the bond market is because if the Federal Reserve hike rates more quickly, then yields will be moving up, and that in turn is what's been lifting the dollar. So that dollar strength has been weakening the majors. That's why we've seen weakness across euro, pounds, a little bit of weakness against the Canadian dollar, and we've seen a bit upside in dollar yen, dollar Swiss franc. Now, a couple of things to be aware of here, okay? If the Fed start to move towards more quick interest rates, expect further dollar strength. And that dollar strength would support something like the dollar yen higher, because if yields keep moving higher in the US 10-year yields, can you see here how closely the dollar yen has been tracking the US dollar 10-year yields? So as yields rise, so does dollar yen. As yields fall, dollar yen falls. Now, there is a very strong inverse correlation between 10-year yields and the Japanese yen. Now, let me just show you that. Where is it? Yeah, let me just show you that here. I'm going to show you the yen. I'm just going to overlay on the yen, 10-year yield. So if you just take a look at the yen here, I'm only going to leave the yen on the chart, right? And we've got 10-year yields. So you see, as 10-year yields rise, the yen falls. Rising, if you look here, see, rising US 10-year yields, yen weakens. Now, if I just inverse this correlation, you see, the correlation is not perfect, but let me just invert the scale. Do you see how close the correlation is? So there's an inverse correlation one to the other, and you can see, yeah, it doesn't always work, but generally speaking, there is this inverse correlation. So rising yen, falling US 10-year yields. Falling US 10-year yields, rising yen. So that means if the US 10-year yields start rising, we expect the yen to weaken. So once you've got that correlation in your mind, remember that, and remember how that's impacting the dollar yen pair, okay? So rising 10-year yields, that's weakening the yen. Falling 10-year yields, that's strengthening the yen. Now, if we take that with something like the Reserve Bank of New Zealand, okay? We know that RBNZ are meeting this week. We will cover it in a minute in more detail. But we've got to be aware of this inverse correlation between US 10 yields. You see here, the New Zealand dollar yen. Now, are we expecting the RBNZ to be more hawkish? Yes. So we're expecting more upside in New Zealand dollar yen, but we need to keep an eye on what's happening with the 10-year yields. Now, if 10-year yields start surging higher and more faster than expected interest rate hikes from the Federal Reserve, expect New Zealand dollar yen to move to the upside, because that helps keep the yen weak. Now, look how weak the yen has been recently. You see here, this is the Commitment for Traders report, and we have here large speculators are heavily short the yen. That's like asset managers, fund managers, and also leverage funds are very short the yen. Now, just because something's very short doesn't mean that it's necessarily oversold. There's strong fundamental reasons for yen weakness. But this is one thing to look out for. If we see more hawkish comments coming out of more dovish and neutral Fed members, look out for the New Zealand dollar yen upside. Now, the key event, weekly trading opportunity event that we have is the RBNZ interest rate meeting on Wednesday. Now, I'm going to briefly run through this with you. Feel free to take a screenshot of this so you can read it in your own leisure. But basically, the wages, employment data for New Zealand has been fantastic. Unemployment has been a 14-year low. GDP has come in at 2.8% versus expectations of 0.8%. Inflation hit a 10-year high, coming in at 2.2% and 4.9% for the quarterly reading. Okay, so really high. And on top of that, there's been rising dairy prices. Dairy is a big export for New Zealand. So in other words, not only has the economic outlook been really good for New Zealand, but also the Prime Minister, PM Arden, she's announced that the whole country is expected to end lockdown from the 29th of November and domestic orders to open orders to open from the 15th of December. So very hawkish. Now, at the last interest rate meeting, we saw that the RBNZ, there was a buy the rumor, sell the fact response. Yes, they increased interest rates, but that was only what the market was expecting. And so the New Zealand dollar sold off. Now, that could have been reasonably expected. Why might have that reasonably been expected? Simply because this is a very common and repeated market pattern. If an interest rate hike is expected and the central bank only do what the market is expecting, you often get the reverse action that you'd expect. So for this RBNZ meeting, this is what to expect. If they hike by 50 basis points, so in other words, they're expected to hike by 25, but if they surprise markets and hike by 50, and remember they might, because they only meet once every 3 months. After this meeting, the next meeting is in February. So the RBNZ might hike by 50 basis points. If they do, expect a lot of upside in New Zealand dollar CAD, New Zealand US dollar. You could also look at potentially shorting the Euro New Zealand dollar pair, and you could look at potentially using a sell on stop. Often the sell on stop is quite a successful technique where you can simply, and I'll just show you how to do that. You can simply place a sell on stop order about sort of 30 or 40 points below the price and just a few seconds before the meeting. And if the RBNZ do hike by 50 basis points, you'd expect the Euro New Zealand dollar pair to fall about 100, 120 points. So selling on stop just before the interest rate meeting can be good, but obviously if they don't hike by 50 basis points, you would immediately remove the order. So that's my personal technique that I'll use for these kind of trading scenarios. Now, this is what you need to look at. I'll very quickly run through the expectations. If they surprise by 50 basis points, New Zealand dollar CAD upside, New Zealand US dollar upside, I favour New Zealand dollar CAD upside over the New Zealand US dollar. If they increase their medium-term official cash rate projections, or increase 2024 official cash rate projection. In other words, if they say, look, we have to raise interest rates more quickly than we previously thought, that's bullish New Zealand dollar. If they change the tone on inflation to reflect concerns about overheating, so in other words, if they say, oh, we're worried about inflation, it's getting too high, we might have to hike interest rates more quickly, etc., etc. All of that is New Zealand dollar bullish. Now, if they are like more dovish, so if they hike by 25 basis points as expected, they're only doing what the market thought. And if they leave the medium-term official cash rate projection unchanged, and they stick to the tone by acknowledging higher inflation but waiting for more information, expect New Zealand dollar downside. So one potentially area to look at is the Australian dollar, New Zealand dollar pair upside. Now, I'll explain why. First of all, if you're trading central bank policy divergence between the RBA and the RBNZ, your go-to pair is the Australian dollar, New Zealand dollar currency pair. That should be your basic pair. But the reason the Australian dollar is more important at the moment is because the People's Bank of China have hinted to markets, potentially, that they might be adding some more stimulus. They removed a phrase from one of their latest meetings saying that they are going to, they removed a phrase saying they're not going to flood the country with stimulus. This is seen by some analysts, including analysts at Goldman Sachs, as being a hint that more stimulus could be on the way from the People's Bank of China. That is a boost for the Australian dollar. Why, you say? Because the Australian dollar main trade partner is China. And so if China's economy is doing well, that supports the Australian dollar. Also, iron ore prices are moving higher. Now, iron ore prices moving higher is also supporting for the Australian dollar. So therefore, at the RBNZ rate decision, if the RBNZ are more dovish and only do what the market expects, look for Aussie New Zealand dollar upside. Okay, that's the key outlook. And that is the main trading event. Yeah, thanks, Johan. Is it corporate month end Friday too? yet. Now that is, I'm not sure where we are in the month. We might have another. Let's have a quick look. It's 22nd now. Let me just see where we are on the calendar. Just checking the. Yeah. So it could, yeah, 26 is coming into month end. So watch out for month end flows on Friday as well. So Josh makes a good point. Now, what we need to look out for is when you get slower volatility, like we might very easily get on Thursday and Friday, markets can either move lows or not at all. Now you think, well, why is that? It's because if there is, like, when lots of market participants are in, right, you get loads of orders, and those orders slow price down. Okay, so you get hit buy orders, sell orders, and you move up a little bit. Now, if everyone's on holiday, and so there's some really big news that comes overnight, then you get huge moves because those orders, traders aren't placing those orders, so it means that price skips through large chunks of gaps on the chart looking for orders. So that's why on holidays you can have some really volatile moves. Now I'll share a couple of trades with you what I'm in at the moment ahead of the RBNZ. Now I'm a little bit speculative, but I am currently short Euro New Zealand dollar pair. I'll explain why. Do you see this very, very bearish candlestick? Now note this, when you see a candlestick like this, selling right into the close, technically, it extends the length of the candle. So the length of that candle is what you could expect as a near-term target to the downside, what, around just above 1.5, 200, 100, something like that, maybe a bit higher. But you see it's broken through that trend line, broken through that support, and there's reasons. The Eurozone is experiencing rising COVID-19 cases. But let's just have a quick look at that, and we can see those COVID-19 cases. Europe, you can easily see this. Let's just see if there's a quick graph. I'm trying to look for a decent graph. Just look at statistics, all right, as well, isn't that? Let's just. Okay, so there we go. So you can just see that cases, like in Austria is now in lockdown, okay? So it's had like all these cases in the past 7 days, like, a big number and really rocking. Now, Netherlands not too far behind, they've gone into some restrictions. Belgium quite close behind Netherlands. There's been rioting in Netherlands about the extra restrictions. We can also see that, Ireland, Slovenia, Gibraltar, quite high levels are going up there. Now, if these numbers keep rising, Germany, we had Angela Merkel coming out today, and Angela Merkel's been making some pretty bearish comments. We just see what Merkel's latest comments are. Says the COVID-19 situation is the worst it's ever been, argues for stricter controls. Okay, so that means, will Germany go into a lockdown alongside Austria? It's quite possible. So therefore, heading into the RBNZ meeting, we might see some more euro downside. Now, New Zealand dollar might be bought into the meeting. Now, the meeting's on Wednesday, and typically you see like a buy the rumor, sell the fact response. So I'm expecting the New Zealand dollar to be still bought into Wednesday's meeting. In a very similar way, I'm expecting upside in New Zealand dollar CAD. Now, New Zealand dollar US dollar, because the dollar's finding some strength, I wanted to pair the New Zealand dollar currency up with the CAD. Now, first of all, you can see this false break of a Harami inside bar, and the New Zealand dollar CAD is finding support the 100, 200 exponential moving average, right? Now the Canadian dollar is facing some pressure because of the commodity markets. CAD is very closely correlated with oil. So when oil falls, CAD drops, right? That's because Canada has huge amounts of oil reserves and large oil exports. So what's good for oil is good for CAD. What's bad for oil is bad for CAD. So if I just overlay the CAD on this chart, we'll get rid of the 10-year yields, and let's just quickly compare US oil, right? What you'll see is, you see this, you see rising oil, rising CAD, falling oil, falling CAD. You see the connection, see how close it is? So that means that with oil falling, I'm expecting a little bit more weakness in the CAD against the New Zealand dollar. So that's why I've been favoring this upside, okay, in the CAD. That's upside in New Zealand dollar CAD rather. So this is a couple of trades that I've made speculatively into the event. Now it is a bit more speculative, but you can see the logic for it. And if we just did like a quick, and if you look at the bond yield spread on the Euro New Zealand dollar pair, right? So look at the bond yield spread for German 10-year bonds and New Zealand 10-year bonds. See, they've dropped. Now, the bond yield spread is just like a risk profile, right? It's a great risk profile. But if you want to see how markets are doing in terms of their risk, just put your bond yield spread on. It's fantastic, right? Dead easy. And you see bond yield spread dropping lower. That's the bond yield spread between German 10-year and New Zealand 10 years. All of that is technically and fundamentally pointing into lower prices. Now, obviously, all of that has to change when we get to the event. So if I'm in profit, I might lock some in, I might move to break even. I'm going to see how I feel. I'm not, you know, definitely doing anything. Now, if you know, I'm out of profit, I will close the trade. I won't be holding a trade through the event because it's too much of a risk. But into the event, what are we expecting? Well, we've gone through the expectations. We're expecting either a 25 basis point or a 50 basis point hike, right? So both of those are pretty hawkish. So we'd expect to find New Zealand dollar being bid on that. Euro struggling with COVID-19 cases. CAD struggling with falling oil markets, and oil markets are fearing more emergency releases, particularly from the US. That's what's been weighing on the oil markets. We probably spoke about this last week, that the OPEC had an argument basically with the US. OPEC sort of has been managing their oil prices really well, really cleverly. And the US were like, we don't like these higher oil prices, it's adding to our inflation problems. So they said to OPEC, oh, you know, OPEC, please can you increase production? OPEC said, no, you could do something about these markets as well if you wanted to, right? US annoyed. They then go around speaking to China, Taiwan, India, Japan, and sort of said, oh guys, you know, would you consider releasing some of your emergency oil reserves to bring oil prices down? And they've gone, yeah, we would. So that pressure has been just sat on oil. And that's why oil is just pushing now through that key overhead support and into that major support level around that 75, 77 band. But in the near term, right, that's just a little bit of weakness for CAD. So you can see a speculative long at market, that's not unreasonable. Stops running below 0.8761 and just pulling the trade before Wednesday's meeting. Not unreasonable. Wouldn't be surprising to see this. Wouldn't be surprised to see price move up into 0.8900 ahead of the meeting tomorrow. Wednesday, correction. I hope that makes sense. I hope you can understand the logic there. That's the key reason. Now, as we come into the end of the week, you know, markets will start to get pretty quiet. So expectations, look out for the euro tomorrow. Remember, these data points will be looked at quite carefully. Now, with sentiment turning a little bit more negative in the euro. Wouldn't be surprised to see a miss. If we see it, German data is very important for the euro because Germany is the largest player in Europe. What's bad for Germany is bad for the euro. What's good for Germany is good for the euro. So a negative reading there, and that's the sort of thing that could accelerate a euro New Zealand dollar downside. So look out for that. It's worth looking at. Now, the main risk, obviously, with this trade is like it's selling right into support. You see, that's not a great area to be selling into support, but given the overall fundamentals and the technicals, it's not an unreasonable trade to make. A better opportunity, selling at 1.16300 would be a much more attractive level for selling into. Okay, but that's just how I'm looking at that, how I'm playing that. And notice that very bearish development in the monthly candlestick chart. Okay, folks, I think that is it. Oh yeah, make sure you follow me on Twitter. My Twitter handle is @GilesCochranCCA. If you're not already, do follow me here. I put quite a lot of good information up there. I've got some pretty interesting seasonal posts on about the New Zealand dollar. So go and check that out. Also check out my blog at HYCMlab.com. I put loads of different events up on there, and I will be covering the central bank meeting afterwards. So if you want to see exactly what that means, just pop by the blog. I'm just putting that out there, and you can see what's going on. On Wednesday, a very important concept, I will be showing you how to use expectancy in your trading. Don't miss it. And I'll run through how you could have used it for the RBNZ rate meeting, for instance, and how you could take a trade with potentially less than 1-to-1 risk reward, but still be statistically on the right side of your trading logic. So I hope that helps. Really looking forward to going into more detail with folks on Wednesday about expectancy. It's an exciting concept. I hope that you have a really good week, and I look forward to seeing you on Wednesday or on Monday next week. Take care, everyone, now. Have a good time. Goodbye.